What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Palantir Technologies, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Monday, February 12th. Well, Palantir stock here today, when it was all said and done, finishing the day just barely red, pretty much flat, down about 13 cents a share, minus 0.53%. Now, we have a bit to look at here, but let's start by taking a zoomed-in look at the first half of the day on the 1-minute chart. Just want to show you guys, we had this little bounce setup forming here early in the day. It was too sloppy. I saw that the 20-period EMA, which I like to utilize as a channel width indicator, of course, not for indication of entries or exits, but I use it as an indication of whether or not there's enough room on a potential trade without hangups, okay, on the return toward equilibrium that I'm looking for. And I've found over time that when the channel tightens down too much on the traditional bounce or rejection setups of this style of scalp in particular that I like to look at, when that channel tightens down, it tends to flip the edge from positive expected value to negative expected value, at least to even, right, or negative expected value over time. So I have to avoid those trades. Listen, if you guys want to get my personal scalp setup alerts every single trading day, take a look at that first link in the pinned comment. The price goes up over time, but you can get grandfathered in at the current rate, and you'll retain that rate for as long as you retain the membership. Hope to see you join. But let's take a look now at the 5-minute chart and look at the volume that we're always so interested in. Now, the reason, again, we're looking at this, I like to look at very obvious changes in volume that correlate with stock price movement, okay? That gives us a good indication, if we're able to pull any data, of the larger market sample sizes opinion, okay, just based on the stock price. Then we can look at the options as well. Well, if you see here, we saw this fade early in the day for the first hour and 50 minutes of today's trading. And what you'll notice here, if we look at the volume, we have to know already in the context that that first candle of the day is almost always going to be one of, if not the highest volume candles of the entire day. So understanding that and then looking at this with that trained eye, we look at this downside move, and listen, I mean, we did see some increased volume as that downside move sort of accelerated here between about 10:40 Eastern time and 11:15 Eastern time. It's not nearly as obvious as we have seen on a couple of days on Palantir this week, but it's definitely there. Now, the bears are going to like to see that, but I mean, listen, it's not detrimental in any way. Again, what we're looking for is just as much volume as possible on moves that confirm our bias, and then as little volume as possible on moves that go against our current sentiment. Okay, so let's now move on, take a look at the 30-minute and get a contextual view of these self-fulfilling prophecy levels of interest to watch that I think most traders and investors are going to be looking at come Monday. So we can be contextual with what we're looking at here. So we look and we have the 50 period, that white line here on the 30-minute chart. Very common indicator on a very common chart, okay, becomes a self-fulfilling prophecy, and we know that from looking at this for years. But remember, as always, we're never just looking at one time frame. We have to be looking at multiple time frames. I prefer in this setting to look at the 30-minute, the 4-hour, and the daily, right? So the 30-minute, the 4-hour, and the daily, all with the same indicators on there. The 50 period moving average, very common. I want all eyeballs on those indicators, right? Self-fulfilling prophecy. And the 200 period. So here on the 30-minute, obviously the 200 period is not all that relevant. It's right about $21 a share. The 50 period, though, is currently sitting right around $24.59 with the stock price at $24.32. So looking ahead till Monday, or to Monday more so, what I'm looking for here from a bullish perspective, reclaim the 50 period, ideally pop up through there, retest it, reclaim it as support, and then pop up out of the hole, getting really above $25 a share. If you're a bear, reject as hard as possible away from that 50 period here, specifically on the 30-minute chart, make our way back down to these technical levels, and then ideally, really, if you're a bear, back down toward that 200 period moving average here on the 30-minute. Now, let's take a look at the 4-hour. You can see here immediately that both of these, the 50 and the 200, are taking their time. Palantir has been on an absolute tear, so these two are not going to be immediately caught up. The longer time frame you go, the more delayed these indicators are going to be, right? So listen, in the context of this video, looking ahead to Monday, we can't sit here and make stuff up. The 4 hour, listen, it's relevant. I'm watching it every day regardless, but that nearest level is down below 20 bucks a share. I'm paying attention to it. From a bullish perspective, I want that thing getting upside as quick as possible, get some feet up underneath the move ASAP. From a bearish perspective, you want this thing hanging out down here as long as possible. Ideally, delay that upside move in the moving averages to allow this stock to, quote unquote, kind of float on thin air. Because, I mean, you better believe it, a lot of bears are looking at this gap here between that 50 period and the current stock price on the 4 hour, and they're salivating at that, saying, hey, listen, there's a big reason that the stock could come plummeting down for a retest. That's what the bears are going to be thinking psychologically, right? We have to put ourselves in the head of the enemy, okay? Bears are doing the same thing with the bulls. Let's now zoom out to, I think, arguably the most important chart by far out of all of them, really on any security. It's going to be the daily. Why is it the most important? Because it's the most heavily watched. Again, you know, I believe in psychology of the market. So I want to be watching what everybody else is watching and programming algorithms to watch and the levels that they're making decisions around. Okay, so here on the daily, you can see here the 50-day, the 200-day, the most common indicators aren't even in play hardly. The 200-day is below 16 bucks a share. The 50 days below 18 bucks a share. So what am I looking at? Well, we're right around a huge psychological level like we've been talking about, right? $25 a share. Okay, just to show you guys, if we look at the 30-minute here, you know, yesterday we were talking a lot, or more so, you know, Thursday night, we talked a lot about how the stock was just struggling to get above 25. We tested 25, above 25 on Friday in pre-market, today in pre-market, right? And it, again, failed. It faded hard off that level. So, looking ahead to Monday, all right, 25 is back on the menu. If you're a bull, if I'm a bull, right, I'm looking at 25 bucks a share and saying, let's reclaim that. That's my number one priority for Monday. Reclaim 25 bucks a share and close above that level. Ideally, that would be beautiful. Claim it as support. And if I'm bearish, I mean, it's even easier, right? Just fade hard away from 25. I don't care if we retest it. Just fade off 25. Claim it as resistance, or more so, confirm it as resistance, because we've been seeing that here now the last couple of days. Implied volatility here, again, it's in the probably low to mid range compared to the recent past. Understand, the higher implied volatility goes, the more Vega value gets priced into those contracts. So if you're buying when it's high, you're paying a bit of a premium that you could see fade off if IV comes back down. If you own while it's on the rise, like let's say you bought contracts back here and you run them up to here, okay, you experience some IV pump. Now you still have to be right directionally from a delta perspective, but Vega is a Greek that has a massive influence on the value of contracts that cannot be overlooked if you want to have success trading options in, you know, even the midterm, but especially the long term. You have to understand how implied volatility impacts the value of those contracts. I'm not the guy that's going to say, well, you have to pay your dues because we all did. No. This here will help you tremendously in making money trading options. Understand this. Ideally, again, you still have to be right directionally, but you want to buy options when IV is low if you see it returning back toward equilibrium. Okay, that goes for calls and puts, by the way. Let's finish out here by taking a look at the bias here in the chain. 1.3 million total contracts traded here on Friday. Good sample size. 918,000 of those were calls. 390,000 of those were puts. Massive call side bias in the overall call to put ratio here. The short-term speculators, that's 0 to 20 delta range. Those short dated typically out of the money calls and puts. 288,000 calls. 169,000 puts, rounded down on both of those. That's still some relatively heavy call side bias. And then if we look at the long term, especially like look here, the deep in the money calls versus puts, 81 to 100 delta, Those are those higher quality, typically more expensive, deep in the money, usually mid to longer term contracts. 100,000 calls, 14,000 puts. We're seeing relatively heavy call side bias across all time frames, overall, short dated and mid to longer dated. Listen, as always, around here risk management is number one. Please manage your risk. The options traders can always be wrong, and they often are. Hey, listen, before you head out, if you got value out of this video, please subscribe to the channel. It's a brand new channel. It helps out tremendously. I really appreciate it, and I'll see you in the next one.